Welcome to Rand's Course EU morning briefing for Tuesday, 16th of June 2009. Just headed through now, 8:30 here in London. Just taking a quick look around the market. Somewhat of a cautious opening, obviously following on from the losses we saw yesterday on Wall Street in the US after pretty abysmal Empire manufacturing report, and also that lower than expected NAHB housing market index number. So again, stocks in Wall Street finishing down just over 2%, reflected as well in the Nikkei overnight. That finished down some 2.5%, with JGBs up around 35 ticks or so. So this morning then, quite a lot of news flow to get through. Just go through some of the key headlines for you. Firstly, starting off in Asia, did see the Bank of Japan had their interest rate decision. As expected, they kept rates on hold at 0.1%. They did, though, upgrade their economic assessment as rising exports and output raised expectations the worst of the recession is over. But they gave somewhat of a cautious tone, suggesting it was in no hurry to end extraordinary policy measures. Elsewhere, again, adding to somewhat of the cautious tone this morning, the latest financial stability report, that's on a 6-monthly basis from the ECB. They've stated that European banks will probably need to write down another $283 billion on bad loans and securities over the next 18 months. They said that the financial sector had increased, or risks in the financial sector had increased in the last 6 months amidst deterioration in the economic environment, which was putting pressure on the bottom line of companies and households. Elsewhere, quite a lot of central banks speak, firstly starting with the Fed, and Fed's Fisher saying doesn't see Fed tightening in the immediate future, and higher bond yields a result of supply and demand. Allied to that, Bullard saying they're cautiously optimistic for some growth in the second half of this year. And this morning, Fed's Duke added that the Fed's actions to keep the credit markets from freezing that they have conducted over the past several months should not be prematurely ended, otherwise it puts any recovery at risk. Elsewhere from the US as well, one thing that is worth keeping a close eye on, especially when the US come in later. Did see a couple of numbers out of US stocks yesterday on US credit card defaults. They did rise to record highs for the month of May. Another sign that consumers remain under severe stress. The likes of Bank of America, their charge-off rates soared to 12.5%, with Amex and Citigroup up around 10.5% margin. Elsewhere, ECB speakers Novotny said Europe is in a very deep depression, and also according to the German economy minister Gutenberg, he believes that German unemployment will rise to around 4.6 million next year, despite the economy making a hesitant recovery. One of the other major themes, of course, at the moment very much is the global role of the US dollar. Overnight, we saw Bank of Japan's Yasano. He reiterated his stance as we saw Japan over the weekend at the G8 meeting, saying that the dollar will remain the world's key reserve currency, despite calls among some countries to reduce dependence on it. Again, that was according to Japan. However, the latest news to hit the wires this morning has come out of Russia's Medvedev, who has said that the world needs a new reserve currency. Again, somewhat different to what they were indicating from the BRIC nations yesterday, and hence this morning, on the back of that Medvedev comment, we have seen the dollar index hit session lows, and also Treasury prices took a bit of a hit on the back of that comment. Again, Medvedev saying the world needs new reserve currencies. We'll be keeping an eye on any comments out of that BRIC summit as we head throughout this European morning. So just taking a look then towards the calendar for today. Next major data we'll be looking at from the UK will be at 9:30. CPI for the month of May, analysts are expecting the consensus to come in at 2% on a year-on-year basis. That would be in line with the Bank of England's target, and a contraction from April's 2.3%. Press this morning stating that cheaper prices for food are expected to have driven down inflation in the UK. However, it is likely to be somewhat capped by rebounding petrol prices and the rise in tobacco and alcohol duties, which were announced in the most recent budget by the Treasury. Elsewhere, the other focus this morning from the Eurozone will be the ZEW survey from Germany. Analysts again on the sentiment headline expecting a slight improvement to 35 this morning from a previous of 31.1. And in the focus in the US data today, quite a busy on the 1:30 figures. We'll see the PPI numbers alongside housing starts and building permits for the month of May.